Good morning, friends. Welcome to the point. In today's video, we are going to discuss a very important bill that is in the discussion stage, and the bill is Financial Resolution and Deposit Insurance Bill. Now, this bill pertains to ensuring the amount that is deposited by the account holder in some bank. For an example, so many people like you and I open accounts with some or the other banks. So, what if one bank goes insolvent or bankrupt? So what about the amount that is being deposited with the bank in the saving banks account or the term deposit account? There is an organization by the name of DICGC which provides insurance on the amount that was deposited with the bank. And what is the insurance? Let's suppose if you have deposited amount around 5 lakh in a bank, and this bank goes bankrupt. So the DICGC will return the amount at the max 1 lakh rupee per account to you, irrespective of the amount that is being deposited. So now if you see from the account holder's point of view, that the amount that was deposited was 5 lakh, whereas you are just being insured for a sum of maximum that is rupees 1 lakh, which is not fair from the account holder's point of view. So there was a lot of discussion and debate that was going in the economy and the parliament as well, that this limit should be increased and there should be some agency that could provide the speedy resolution when the bank or any financial institution goes bankrupt. So that is why this bill is being introduced, that empowers the central government to create a single agency for resolution of financial firms such as banks, insurance companies or NBFCs and stock exchanges in case they go insolvent. So earlier all of this procedure was taken care by DICGC, that is Deposit Insurance and Credit Guarantee Corporation, but the maximum amount of insurance that they provide is 1 lakh rupees per account, irrespective of the amount that you have deposited. Let's suppose if you hold rupees 50,000 in the account, you will get the 50,000 back. But if the amount is above 1 lakh, no matter how much is the amount, you will only get insured by the sum of rupees 1 lakh. So in order to change the provisions and to increase the sum or the amount insured by the agency, this Financial Resolution and Deposit Insurance Bill was introduced. Now what are the objectives or the provisions of the bills? So first is establishment of Resolution Corporation in Mumbai. The corporation that will be set up, it will be in Mumbai. Corporation shall have the same powers as are vested in a civil court under the Code of Civil Procedure 1908 while trying a suit. So while hearing the case of the insolvency of the bank or any financial intermediary, the corporation which is gonna be set up in case of insolvency will have the same power as that of a civil court. The next is the financial firms will be classified into 5 categories on the basis of financial risk to ensure that there is clear mechanism for assessment, monitoring and dealing with the imminent failures before they occur. So all the financial intermediaries will not be subject to same behavior. That is why they are classified into 5 different categories. If an institution has been classified as critical, its management will be taken over by the resolution firm for restoration and resolution. As I told, that every category has its own provisions. Every institution falling in different category will be subjected to different treatment. So a financial institution falling in the category of critical, so in that case the management will be taken over by the resolution firm for restoration and speedy resolution. Resolution may be undertaken using methods like mergers or acquisition, transferring the assets, liabilities and management to a temporary firm, also called special purpose vehicle. It could be liquidated or it could be bailout. So these are the provisions or the methods used for the resolution of the firms that comes under the ambit of FRDI bill. Now moving next slide, which talks about the concerns. So what are the concerns or the limitations of the bill? So the first one is the proposed bill seeks the closure of DICGC as the credit guarantee will be taken care of by the Resolution Corporation. So after or if the bill is passed by the parliament, DICGC will stand closed and everything will now be taken over by the Resolution Corporation. The Resolution Corporation is empowered to monitor financial firms, calculate stress and take corrective action in case of failure. According to Section 52 of the bill, depositors will lose their rightful claim to retrieve their saving in case of liquidation of banks and insurance companies. So this is something of concern that the deposit holder loses its right to retrieve the amount. Now this is actually, if you see from the customers or the account holders point of view, is very painful that the money gets blocked and the person is not able to withdraw the money. So this is something which the FRDI bill should reconsider, that the deposit holders should be allowed to retrieve their amount, or at least, if not all amounts, at least some amount out of the amount deposited. The next concern, which is a very major issue, is that the bill does not specifically or clarify the amount by which an account will be insured. Like with the DICGC, it was 1 lakh rupees per account. Now there is no amount that is fixed in the bill. So this is something really of concern. And the last one, it does not specify the amount of a depositor that would be paid in case of liquidation. So as it was fixed by DICGC that the upper limit is 1 lakh rupees in case of liquidation that will be paid to the depositor, but in this case of the new bill, no amount is being specified as of yet, that how much amount a depositor will get in case the liquidation proceeding starts or the bank goes insolvent. So these were the concerns of the bill. So I hope it is clear to you that what this FRDI bill is all about. If it stands passed, DICGC will get resolved and everything will be taken care of by the resolution corporation. And the objective behind introducing this bill is that where right now just 1 lakh rupee is being insured, or sum is insured by just 1 lakh rupees, this needs to be increased, because there are so many deposits or accounts in the bank where the amount deposited is so huge that giving 1 lakh as a return does not serve the purpose. For an example, if you consider that if a person has deposited 50 crores or is a deposit holder of 50 crores in a bank account, so if the bank goes insolvent, only the amount that only he'll get is rupees 1 lakh, which is just peanuts in front of 50 crores. So that will not solve the purpose. So that is why this bill is being introduced, but it also suffers from the limitation at the same time, which needs to be taken care of in the long run. So friends, this is all for the today's video, and thank you for patience listening.